Hello, very good morning to all and happy Friday. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Today will be Friday, the 4th of April, 2025. So before we start today's gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before I start over here is that I do apologize that if the sound is a bit unclear because right now at the place that I'm doing this webinar, there's this slight construction going on in my neighborhood. So I try my best to speak as loudly as possible. All right. So as usual, before we jump straight into the gist of today's daily dose, which is the intraday technical outlook on those broad-based cross asset classes that we cover on a daily basis, the major dollar pair, the major stock indices, two key commodities, which is IEXAU/USD and West Texas crude oil, WTI crude. Let's have a recap what has taken shape yesterday in terms of the movement of the intraday price action of these broad-based cross asset classes, followed by any relevant economic data release or news flow. So we know that yesterday's big move exposed US Liberation Day, which is a so-called as proclaimed by Trump of make America wealthy again by the enacting of his very we call it most broad-based reciprocal tariffs that US wants to target against all major trading partners. The stock market reacted negatively. That's within our expectation. So for those who followed my daily dose of market insights, the Nasdaq 100, the US Wall Street 30, which represent the Dow Jones Industrial Average, came down within that technical bearish configuration and hit those short-term support level that we highlighted yesterday. So later I'll touch on more what are the key levels to watch out for today. So yesterday's news flow was actually important data was actually this entire sea of red in the US stock market, which is down by 2.5 trillion. So there's 2.5 trillion being wiped out from the entire US stock market. And you see the heat map of the S&P 500, almost all of them in the red. Only we see certain pockets that is in the defensive sector, which is the consumer staples. Some of the particular stock managed to inch up higher, like Philip Morris, which is a tobacco company, up positive 3.8%. Coca-Cola up 2.6%, and some of the healthcare stocks like United Healthcare is up by 3.3%. So if you look at the entire stock market, the worst hit was the semiconductor stocks over here. Why Nvidia down by negative 7.8% because of supply chain disruption that is coming up from these reciprocal trade tariffs that could be pretty much detrimental on how Nvidia source their parts. That means, i.e., over here there will be higher cost of doing business for Nvidia going forward, and also potentially there could for tit for tat measures coming out from China and those countries that's being hit, like example South Korea and even Japan. And right now, even untraditional countries right now are bundling together, Japan, South Korea, and China, in deciding on how to counter Trump's reciprocal trade tariffs. All right, and Apple was the worst hit among the mega cap stocks over here, down close to negative 10% at one point in time yesterday, but the close is down negative 9%. So why Apple got hit? Because of its the way how its parts are being scattered across its global supply chain, primarily in Asia, especially in Vietnam, in China, in India as well, because all these countries are also being hit by Trump reciprocal trade tariffs. So that should explain why Apple stocks got hit pretty much badly due to going forward, its cost of doing business increases. That means, i.e., earnings expectation is expected to be downgraded or revised downwards over here. So if you look at the heat map of the 11 sectors, 11 key sectors on the S&P 500. So what I could see is that only one sole particular sector that is outperforming, which is the consumer defensive or the consumer staples over here. So let me expand my screen. So you can see, consumer defensive as a whole is up by a positive 0.49%. And if you look at from a rolling 1 week performance, two key defensive sector, the consumer defensive, which is considered as consumer staples, up by 2% 1 week rolling performance, and utilities up by 1.81%. But the worst hit is the consumer cyclical and the technology stocks, which is down by negative 7.71% and down by negative 6.9% for the consumer cyclical stocks or the consumer discretionary stocks sectors, I would say, based on a 1 week rolling performance. All right, and net overall, we also start to see the dollar weakening throughout the board over here. All right, the dollar weakening. So this is a 5-day rolling performance. So like I mentioned yesterday, this should be 4th of April. So the worst hit was against the yen and now against the Swiss franc, because the yen and the Swiss franc are being used as a traditional safe haven hedging currency in terms of risk off event. And this time around, what's surprising over here is that the risk off event is not benefiting the dollar. Like I explained why, because there's this global stock market rotation, wherein since the pandemic low of March 2020, there's tremendous amount of capital inflows into US equity or US stocks, especially pertaining to those mega cap technology stocks, the likes of Apple, and the last 5 years will be Nvidia, driven by AI. And because of this reciprocal trade tariffs, potentially is one of the most aggressive trade tariffs plan that is being enacted by the current White House administration, and that increases the probability of stagflation risk in the US. So that being said, stagflation risk in the US, the US Federal Reserve, their hands are now tied. If there's any economic slowdown or if there's any significant risk off in the US stock market, they cannot be so easily igniting another round of dovish monetary policy, because that could actually further kickstart further inflationary pressure because of the supply chain disruption. So potentially that start to see a flight of because a sector, a global stock market rotation out of US stock. So out of US stock, that actually put downside pressure on the US dollar. So that actually explains why the dollars sold off yesterday. So then I did mention over here is that the dollar sold off is not uniform across the board. Why? Because risk sensitive currency like the Aussie dollar will also tend to be weak or sideways during this kind of global risk off sentiment, which is pretty much true. So if you look at the Aussie dollar now, the dollar is now strengthening against the Aussie, and where it's strengthened is the Aussie is as the key pivotal medium-term resistance at the 64 figure level when I touch on the Aussie dollar chart thereafter. Okay, so I'll later cover on the technical chart why the Aussie dollar now, yesterday the Aussie strength starts to get muted because it come close to a medium-term pivotal resistance, which is at the 64 figure level. And also fundamentally, the Aussie dollar also cannot strengthen too much in the episode of a risk off environment in equity. Why? Because the Aussie dollar is considered as a high beta currency or the risk proxy currency, and also pretty much driven by industrial matters. And we know that if there's a global stagflation risk in US, that could actually translate to global economic weakness, that could lead to lesser demand in industrial matters, which also doesn't gel well to the Aussie dollar as well. Okay, so I'll touch more about that. And yesterday's big move was also in West Texas crude oil. So we know that West Texas crude oil yesterday plummeted by 6%, or there's a huge plunge in West Texas crude oil, plummeted by 6% over here, right? More 6%. Why? Because number one, due to this US reciprocal trade tariffs, it could potentially slow down global economic growth. Slowdown in global economic growth, i.e., lead to lesser demand for energy products. And also as well, it seems to us that OPEC Plus is still ongoing. Next month, they will actually introduce their production hike. That means they will increase their supply, all right, to actually counter US supply coming out from shale gas. Because one of Trump's pet policy is to make America oil great again. That means, i.e., using urging America oil company to pump as much shale gas as possible. So to counter that, very high likely OPEC Plus will stick to its stance by increasing its cartel production hike going forward in April. Yeah, in fact this month or end of in April. All right. So agree to, yeah, it's next month. Yeah, because 8 key OPEC Plus producer agree to boost output supply by 411k barrels per day next month, in the month of May. So unless they change their stance and decide to delay this price, this output hike again in OPEC plus members, then that could actually potentially may slow down the slide of oil price, the West Texas crude oil price. So that will touch you on this West Texas crude oil price technical configuration, because yesterday 6% drop is very significant. In fact, it is the drop of the worst daily drop for West Texas crude oil since September 2022. So later I'll touch on the technical chart on West Texas crude oil, because it's now back to a very critical juncture again at around that $65 per barrel. All right. Now, another news flow I want to highlight is more pertaining to this ISM services PMI data, or I would say economic data released yesterday. So why ISM services PMI is important? It's being compiled by the ISM Institute, also closely watched by market participants as well. Services PMI is survey-based data. That means ISM sent out a slew of questions to the services industry purchasers manager in terms of number one, new orders flow, the prospect of their business going forward. And why services industry is important in the US, because 3/4 of US economic growth is being driven by services activity. So any slowdown in the services PMI indicate that a higher probability of US slipping into an economic slowdown, and potentially it may lead into a recession as well. So yesterday figure came in at 50.8 for the month of March, way below 53.5 that was printed in the previous month of February, and also way below market expectation of 53. So yesterday figure of 50.8, pardon me, in March is the slowest rate of expansion, or the softest expansion in the service sector in the US economy since June last year, 2024. And if you look at the trend very clearly, it's a very steep fall, printing a series of lower high since October 2024, and now approaching the key support level at 49.2 that was printed in December 2022 and June 2024. Okay, so there's a very steep fall. So if a breakdown below 49.2 over here, potentially we may start to see an increasing risk of US slipping into a recession, or worse still a stagflation scenario due to supply chain disruption and take for that measure that could increase the cost of doing business for US corporation, and that could potentially pass on this cost to US consumer as well. All right, so something to take note of, to indicating that there's higher risk right now that earnings potential in US corporation may get downgraded or revised downward in this upcoming US so-called US earnings season in Q1 that is likely to that is going to be kickstarting next week with the key major banks like the likes of Citigroup and Bank of America, JP Morgan. All right, over here. Okay, so with that, that actually sum up the first segment of today's daily dose that I want to cover. And right now, let us move on to the second segment, which is the intraday technical outlook on the broad-based cross asset classes, starting with the FX market. So as usual, let me expand my screen so that you guys have a better view of the charts. All right, so let us start with the euro dollar. So for the euro dollar, yesterday we do have a bullish bias over here. So the bullish bias hit our resistance level at the 1.1090 level and printed a intraday high of 111.46 during the the start of the European session. Then thereafter it traded sideways entirely during the US session. And what's interesting over here is that this one yesterday's high actually hit exactly at the long-term circular descending channel from January 2008. Okay, so if I go to the weekly time frame chart, or maybe the one month time frame chart, you're able to see very clearly. Right, so this channel here has been in place since June 2008. All right, so it's more than 24 years. Yesterday price action hit exactly at the channel before trading's upper limit of the descending channel before trading sideways, and also with this range resistance that is in place since July 2023. Okay, this range resistance here hit the peak of 18 July peak 2023, hit 2 times on 26 August 2024, come break up, hit the second time in 25th September, third time on 30th of September, and right now the fourth time again on yesterday's session, from the European session and the US session, and it traded sideways. All right, over here. So there's some form of hesitance by the bulls to actually stage a breakout above the 111.15 level. Okay, 111.15 level, and with the RSI now retracing from the from a rather extreme overbought level that is being seen yesterday during the US session. And if you were to look at the RSI, it also has starts to break down below a parallel ascending trend line support that I drew from the low of 1st of April. So in terms of short-term intraday technical perspective, there could be some form of minor mean reversion decline taking shape, given the fact that it has started to stall at the key major resistance level, weakness on the hourly RSI. So with that, we will flip to a intraday bearish bias for today for a potential minor intraday mean reversion decline to take shape, at least in the first step, using 111.15 as my short-term pivotal resistance level on the euro dollar. First support level it got to actually watch to break down will be at the 110.20 level. Okay, let me put it in writing over here. 110, 110.20. All right, so a breakdown below 110.20 may expose the next near-term support level at 109.40 slash 109.70. Only a breakdown below 109.40 may see a deeper mean reversion decline on an intraday basis to retest the 20-day moving average, also confluencing with the next near-term graphical support at 1.0860, which is the former minor swing high of 21st of March to 24th of March, and as well as 3rd of April, where it whipsaw during the release of the US reciprocal trade tariffs announcement, now turns into a pullback support level. All right, so i.e., given the weakness that is being seen on the hourly RSI, indicating there could be a sign of a mean reversion decline scenario after yesterday's swift up move, tested the key resistance level at 111.50, which is a long-term circular descending channel from Jan 2008, and as well as 2023 range resistance level. We are flipping to a intraday bearish bias for a potential minor mean reversion decline scenario in the first step for the euro dollar, using 111.50 as my short-term pivotal resistance for today. Up next will be the sterling dollar. So the sterling dollar also hit our resistance level at 31.70 yesterday, and thereafter it did a pullback. All right, it did a pullback. RSI also exit from an extreme overbought level, and it also starts to break down below a parallel trend line support level that I drew from the low of 31st of March over here. Right, 31st of 31st of March. So indicating there is a glowing increasing risk of a minor mean reversion decline scenario that could take shape, that may take shape in today's intraday European session because of this rather steep up move that is being seen yesterday. And where it paused at the upper limit of this major ascending channel that I drew from the low of January a medium term ascending channel, pardon me, from the low of 13th of January this year, right? 13th of Jan this year, and also confluence with a Fibo extension cluster level of 0.382 from the low of 3rd of February. So with that, I will flip to a intraday bearish bias for the sterling dollar for today as well, using 131.70 slash 32.10 as my short-term pivotal resistance level. First support level to watch will be 130.60. 130.60. Let me put it in writing over here. Okay, 130.60. A breakdown below 130.60 may expose the next near-term support zone at 130.10, 1.2965, which also confluence with the 20-day moving average as well. Only a push up above 1.3210 short-term pivotal resistance level may see the continuation of this impulsive up move to expose the next resistance level at 1.2960, followed by 1.3350 next on the sterling dollar. So i.e., due to the weakness of the hourly RSI and the swift up move that got stalled at the upper limit of this medium-term ascending channel that is in place since 13th of January 2025 low, we'll be flipping to an intraday bearish bias using 131.70 slash 132.10 short-term pivotal resistance on the sterling dollar for a potential minor mean reversion decline scenario that may unfold in today's European session, using 130.60 as my key first intermediate support level to watch. All right. on the sterling dollar. All right, up next will be the Asia Pacific major US dollar pair, starting with the Aussie dollar. So I explained why Aussie dollar yesterday's can't break out, because it came close again to the 64 medium term pivotal resistance level. So this medium term pivotal resistance level is very important. It got rejected in the previous up move on 20th of February this year, got rejected again on 17th of March, and got rejected again yesterday on the 3rd of April, and right now is shaping a bearish Marubozu candlestick, reintegrating back below the 20 and the 50-day moving average. And this 64 medium-term pivotal resistance is very important. Why? Is because it was a former major ascending trend line from the low of October 2022. All right, previously, all right, over here. And if you look at from a intraday technical analysis perspective, okay, so oops, sorry, over here. So yesterday we turned neutral, right? We turned neutral, waiting for it for the price action to pierce up. So it pierced up over here and it came down, and now back below the 20-day and the 50-day moving average, and right now breaking below this support level here, now turns into a first support level to watch at 62.90, slightly below the 50-day and the 20-day moving average. So this will be my first support level, first resistance level to watch, 62.90. So I'm using yesterday's swing high area here that got rejected at the previous swing high, minus swing high of 20th of March. So 63.60/63.70 short-term pivotal resistance level to watch out for today. So I will flip to an intraday bearish bias on the Aussie dollar. First support level to watch will be 62.40, which was the support level that can't break down upon the release of that reciprocal trade tariff. Below 62.40 may expose the minor swing low area of 28th of February and 4th of March at 61.90 next. Only a push up above 63.70 may revisit 64 figure level again, which is the medium term pivotal resistance level. All right, so using 63.70 short term pivotal resistance level, on the Aussie dollar, we are flipping to an intraday bearish bias for today. Two support level to watch, 64.40 followed by 61.90 on the Aussie dollar. Okay, lastly will be the dollar yen. So the dollar yen plummeted as expected. So yesterday we maintained our bearish bias, hit our support level at 145.90. So this level got hit 154.90 over here, and right now is coming very close to the 144.80 support level, which is this congestion. Okay, so let me share with you. So in fact, right now, if I were to look at the daily time frame, okay, easier to see on the daily time frame, is at the 144.80 level over here. All right, and also it also managed to bounce off from a major ascending wedge trend line from the low of 16th of January 2023, right over here. Okay, so there is a confluence of important support right now, where yesterday's sell-off managed to stall at the 144.80 level mark. Okay, so if I were to go to the intraday time frame again, which is the hourly chart over here, what we could see is that the hourly RSI has started to shape a bullish sloping upwards as well. Okay, not sloping upwards, so it starts to show a higher low over here. Okay, indicating that the downside momentum has started to ease off. So with that, I'll be using 144.80 as my short-term pivotal support for today. Potentially, there could be a form of minor mean reversion rebound after yesterday's steep sell-off. Two key resistance levels to watch out for. The first one will be 146.75. Above it, may see 147.60 next. So if you do the Fibo retracement of yesterday's steep sell-off, okay, that's 23.6% Fibo retracement and 38.2% Fibo retracement, very closely. The 146.75, 147.60, which is the former minor swing low area over here of 14th of March, 13th of March, and previously 11th of March and 11th of March, 11th of month, 11th of March and 12th of March. However, if price action starts to do a breakdown below 144.80, then potentially this impulsive up move may resume. Impulsive down move may resume, pardon me, to expose the next near-term support level at 143.90/60, which is the Fibo extension cluster level. Graphically, also, if you go back, this congestion area here of 30th of September, and also the lower limit of this ongoing minor descending channel from the high of 8th of January. All right, so i.e. in a nutshell over here, I'll be using 144.80 as my short-term pivotal support level. We'll flip to an intraday bullish bias on the dollar yen for a potential minor mean reversion rebound scenario that may take shape. Two key resistance level to watch for today on the intraday basis: 146.75 followed by 147.60. Right, so that's for the dollar yen, and also sum up the intraday technical outlook on the major dollar pair. So now let us turn our attention next to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 representing the Hang Seng Index. We will still maintain that neutrality stance for today. Why? Because the cash stock market is closed on the Hong Kong Stock Exchange, or in the Hong Kong Stock Exchange, because of this public holiday in Hong Kong and in China, which is the Qingming Festival. So with that, we'll still have a neutrality stance in the Hong Kong 33, i.e. representing the Hang Seng Index. So maintain neutrality stance for today, 22,980 followed by 22,500. We also got which is confluencing with the 50-day moving average, where the sell-off managed to survive yesterday. All right, up next will be the Nikkei 225, the Japan 225 representing the Nikkei 225. So the Nikkei 225 yesterday plummeted, retested the Asia session low at 33,360 during the US session before managed to stage a minor bounce. All right, over here. So if you look at the hourly RSI, the hourly RSI has started to shape a higher low as well. So indicating that yesterday's sell-off, the downside momentum may have eased off. So there could be a potential chance of a minor bounce taking shape. So with that, I'll be using 33,360 as my short-term pivotal support level for the Japan 225 representing the Nikkei 225. Potential minor flip to an intraday bullish bias for today for a potential minor mean reversion rebound scenario that may play out. Two key intraday resistance level to watch out for the Japan 225 will be at 34,835 followed by 35,330. Only a breakdown below 33,360 invalidate today's intraday bullish bias to see the continuation of the impulsive down move to expose the next near-term support zone at 32,860/32,600 level. All right, so that's for the Japan 225, watching 33,360 as my short-term pivotal support level for a potential minor mean reversion rebound scenario that may play out today on the Japan 225. Up next will be the German 30 representing the German DAX. So the German 30 and German DAX also plummeted and now almost hit our support level, and coming close to the next support level at 31,595, 31,540, which is a Fibo extension fifth wave target at 0.764, and also the lower limit of this minor descending channel that I drew from the high of 26th of March. So the hourly RSI is now coming to the oversold region as well. So with that, there's only a bit of residual push down to go before hitting the 21,540. So I'll be using this 31,595, 21,540 as my short-term pivotal support level for any potential minor turning point for a mean reversion rebound scenario that may play out within this minor descending channel that is still evolving within it. Two key resistance level to watch out for today on the intraday basis will be 21,920. Above it may see 22,240 next over here. If I do the Fibo retracement of this entire down move within this minor descending channel, okay, that also coincide with the 38.2 Fibo retracement level as well. So i.e. in a nutshell, given that it has a bit of residual move down to go, using 21,595, 21,540 short-term pivotal support level for a potential inflection zone to kickstart a minor mean reversion rebound scenario that may take shape on the German 30, using 21,920 as my first resistance level to watch. Above it sees 22,240. However, if price action plummeted below 21,540, today's intraday bullish bias, will be invalidated to see the continuation of the impulsive down move sequence, exposing 21,310/250 next. Below it sees 21,100 next, which confluence 21,100 level next over here. So this level, yes, this level next. So give me a minute. Yes. So with that, that sum up the intraday technical outlook on the German 30, watching the 21,595/21,540 as my short-term pivotal support level for a inflection zone for potential chance of a mean reversion rebound scenario on the German 30. Next up will be the major US stock indices, starting with the US Wall Street 30 representing the Dow Jones Industrial Average. So with that, it came close to the 40,230 short-term support level that we highlighted yesterday in our bearish bias view. Hourly RSI now is at the oversold level, so there could be a chance of a minor bounce taking shape, right, during the US session or during the start of the US session. First resistance level to watch will be at 40,640 over here, 40,640. So I do not want to put it so tight at 40,640 because it's only 1 point. So there's a clear cluster congestion area here, former minor swing low of 31st of March and 3rd of April, which is also the level that it got paused during the start of the US session before the plunge takes shape, right, for the entire session yesterday after the Asia session of yesterday's start of the Asia session. So this is a much more clear resistance level. And if you do the Fibo retracement of the entire sell-off from yesterday's low to current intraday high, that also coincide to 38.2% Fibo retracement as well. So I'll be using a slightly higher level, 41,180/41,320 as my short-term pivotal resistance zone for today on the US Wall Street 30 to maintain that intraday bearish bias for today. Below 40,220 exposes 39,880 next, followed by a breakdown below it may see 39,520. All right, 39,520. So this 39,520 is important because it's a Fibo extension level, and as well as if you go to the daily time frame chart, is the medium term descending channel that I drew from the high of 19th of February over here. All right, only hourly close and the breakout above 41,320 will invalidate today's intraday bearish bias to kickstart a mean reversion rebound scenario, at least on a minor time frame, to revisit 41,615/41,835, which correspond to the downward sloping 20-day moving average as well. So i.e. Still maintaining that intraday bearish bias using an adjusted short-term pivotal resistance level on the US Wall Street 30 at 41,180/41,320 to maintain that intraday bearish bias on the US Wall Street 30. Lastly will be the Nasdaq 100. So the Nasdaq 100 plummeted, all right, over here. So now it already surpassed the support level at 18,570. So hourly RSI also coming very close to the oversold region over here. So there could be a minor bounce taking shape during the start of the US session at the first resistance level, okay, over here at 18,730. Okay, so I don't want to use 18,730 to be so tight as my short-term pivotal resistance level today. I'll use this level at 19,060. So this 19,060, if you do the Fibo retracement of the yesterday's sell-off, today's intraday low over here, that coincides with the 38.2% Fibo retracement as well. And also yesterday's rejection level during the start of the European session. It got rejected at 19,060. So using 19,060 to cap any potential bounces, as long as any bounces didn't surpass above 19,060, we'll maintain that intraday bearish bias on the Nasdaq 100 below 18,430/18,310 exposes the next support level at 17,980 next. All right, over here. So 17,980 will be my next support level to watch, which is the 1.382 Fibo extension from the high of 26th of March. So below 19,980 may expose 17,760 next. All right, let me put it in writing. 17,560. I think it should be this. No, sorry. 17,760. 17,760. Right. Okay, let me put it in writing. 17,760. Okay, so that also confluence with closely the lower limit of this ongoing medium-term descending channel that I drew from the high of 21st of March. Only a push up and an hourly close above 19,060 adjusted short-term pivotal resistance for today on the Nasdaq 100 will invalidate today's intraday bearish bias to kickstart a mean reversion rebound scenario, exposing the next support level at 19,445. Above it sees 19,770, which is the upper limit of this medium-term descending channel. So i.e., in a nutshell, still maintaining that intraday bearish bias on the Nasdaq 100 using an adjusted short-term pivotal resistance for today at 19,060. So that sum up the intraday technical outlook on the major stock indices. Let us now focus our attention to the commodities asset classes, starting from gold XAU/USD. So gold XAU/USD did a choppy session yesterday. Break below our tighten short-term support level. So yesterday we have a very tight short-term support level at around the 3,130 level. Breakdown, hit our alternative support level, which is at the 3,077, 3,060, and managed to stage a rebound back again, but can't break above 3,137 level, and now trading sideways during the Asia session, but managed to survive at this lower limit of this ascending channel, which is the bright green line here. So this bright green line that I draw is the lower limit of this minor ascending channel, where it survived yesterday and it managed to survive right now in today's Asia session as you are speaking. And also this 30-60 level is at this former, where is it? Yeah, this level. This, okay, let me put it the daily time frame. You guys could see pretty much clear. Okay, this, okay, maybe let me go back to the 4-hour time frame. Yes, so this is the former minor swing high of 20th of March, where it did that close to 1 week plus of consolidation. Breakout now turns into a pullback support level that got survived yesterday, and so confluence with the lower limit of this minor ascending channel from 11th of March. So now back to the hourly time frame chart again over here. So with that, that is being supported 30-60. So I'll use 30-60 as my short-term pivotal support for today because it hasn't broke down below it, managed to survive for the second time, and it's also a key graphical support level as well, being determined by two different angles. Firstly, the lower limit of the minor ascending channel from 11th of March low, the former minor swing high area of 20th of March, where thereafter it consolidated sideways before breaking out and now turns into a key pullback support level, at least on a minor time scale. All right, from here. So 30-60 short-term pivotal support level on gold XAU/USD to maintain that intraday bullish bias, but the bulls got to break out very fast above this 3,137 level. All right, 3,137 level to negate any short-term weakness. If it can't break above this 3,137 level, it may just congested in a sideways range configuration. So above 3,137 level may see another fresh all-time high at 3,180 in the first step, followed by 3,215 thereafter, which is a Fibo extension level of 0.764, and also the upper limit of the minor ascending channel. Right. However, if price action plummeted below 3,060 level for today, today's intraday bullish bias will be invalidated to see the continuation of the minor corrective decline sequence unfolding to the downside, exposing 3,028 next. Then thereafter, a breakdown below it may see 3,000 level coming into focus as well. All right, which is the minor swing low area of 21st of March and the rising 20-day moving average at 3,028. Right, so watching the 3,060 short-term pivotal support level on gold XAU/USD. First resistance it got to surpass in order for the bulls to gain traction will be at 3,137. All right, so that sum up the intraday outlook and key levels to watch out for gold XAU/USD. Lastly, like I mentioned, will be West Texas crude oil. So West Texas crude oil yesterday plummeted at 5.8%, negative 5.8%, as indicated by the instrument in our platform, West Texas Oil, and this 5.8% is the worst daily performance or daily sell-off since almost 2.5 years ago. So previously, the worst one was negative 6.12%. That was printed in 7th of September. So this is very, very significant. Why? Because now it's resting at the 65.4 medium-term pivotal support level, which is the ongoing major descending triangle range resistance that is in place since 20th of March 2023. So if we have a daily close below 65.40 and a weekly close, which is today, then potentially we may see a further weakness, because that is constituted as a major range breakdown scenario to expose from a multi-week perspective 6020/5880, which is the March April 2022 swing low area. So what's up? This on a daily basis. What's up on the intraday basis? So on the intraday basis over here, what we could see is that the price action continues to remain weak over here at this juncture. No clear sign of a bullish divergence yet on the hourly RSI. So with that, I will have a rather tight short-term pivotal resistance level for today, still maintaining that intraday bearish bias that we have yesterday on West Texas Oil at 68.05. First support level to watch will be 65.40. Yeah? So this will be the medium-term pivotal range support level. Only a push up and above 68.05 may kickstart a mean reversion rebound scenario, at least on the intraday basis, to expose the next intermediate resistance zone. The next intermediate resistance zone at 6910/6880. Right, above it may see 70.35 coming back into play again, which is the 50-day moving average acting as a similar resistance level as well, and also the minor swing high area that got rejected at the Asia session yesterday, before that steep sell-off took shape in the European session and throughout the US session. So i.e. using a tightened key short-term pivotal resistance for today at 68.05 for West Texas Oil to maintain its intraday bearish bias, but the first support level to watch out for will be at 65.40 in the first step, because that is constituted as a major range support level that is in place since 2.5 years ago, when I show you guys the daily chart of West Texas crude oil earlier. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today, key data to look out for during the European session will be rather quiet. So we only start to see action coming in at 1 hour before the start of the US session, which is 8:30 p.m. Canada key tier 1 job data release. Unemployment rate, market is expecting a slight uptick to 6.7 from 6.6 printed in the previous month of February. The key headline employment change, market is expecting a very rosy job data in Canada, up 12k jobs added for the month of March, above 1.1k added in the previous month of February. So that could influence the dollar CAD rate and even some of the CAD crosses. All right, and key data in US will be the tier 1 job data released at the same time as well at 8:30 p.m. Singapore time. NFP, non-farm payroll. So non-farm payroll market is expecting a slight tick lower, 135k jobs added for the month of March, down slightly from 151k from the job that was added in the previous month. All right, and employment rate will maintain the same at 4.1%. Right, so market will be paying close attention to these numbers that could influence the movement of the major US stock indices and the major dollar pair as well. And thereafter will be a rather quiet session, and the big boss himself will be speaking. Fed Chair Powell, market will be closing watching his speech, especially after the announcement of the US reciprocal trade tariffs and its impact on the major US stock indices, where the stock index sold off yesterday, and with the dollar strength coming back into the picture as well. So Fed Chair market participants will be watching Fed Chair Powell's speech at 11:25 p.m. based on the recent movement of the price action of the stock market, and also the latest trade tariffs that's been announced by Trump administration, and how will he be any hint, and that could impact US Federal Reserve monetary policy going forward. All right, because over here, the Fed itself only penciled in 2 interest rate cuts so far, and market now is looking for another cut that could take shape before 2025 ends. So there is 3 interest rate cut that's being priced in by the market. So will that change? All depends on how Fed Chair Powell speech that he will actually will he mention any hint that it will impact the current situation of these trade tariffs that could increase pricing risk of stagflation risk as being depicted by the price movement of the market. How does that change in terms of the metrics of the Fed decide its monetary policy going forward in 2025? Okay, so that will be at 11:25 p.m. Singapore time. Very important speech to actually hear out too as well. Then thereafter will be other Federal Reserve officials speaking, so that shouldn't be so important other than Fed Chair Powell earlier at 11:25 p.m. Fed Bow will be speaking at 12 a.m. Singapore time, and 12:45 a.m. will be Fed Wheeler. All right, so that should sum up the intraday, the today's daily dose of market insights. I'm Kelvin here, wishing you all a great day ahead and a restful weekend, and we shall speak again on Monday. Thank you.